Hi, my name is Alyssa Nguyen, and I'm going to be using the HOLT lens to compare two software companies, Checkpoint Software Technologies and Venus Tech Group. To begin, let's look at the relative wealth chart, which provides an overview of CFROI levels and discount rate, asset growth, and price performance. For the sake of time, we're going to be mainly focusing on the CFROI panel. In both companies, the CFROI levels are well above their respective discount rates, which means that both are creating economic wealth in comparison to their respective cost of capital. However, since Checkpoint is a more mature company, its CFROI has been more stable in recent years and growth has been slow. These factors imply a slow fade, which is a company's reversion to the long-term average CFROI of 6%. We also see that Checkpoint is currently undervalued, since its forecast CFROI is higher than its market implied CFROI. Looking at Venus Tech's CFROI chart, we see that there has been more volatility and growth in recent years, since it is a newer company. This implies a much faster and steeper fade. Also, in contrast to Checkpoint, Venus Tech is overvalued since its forecast CFROI is lower than its market implied CFROI. Taking a quick glance at the asset growth panel, we see that Checkpoint's asset growth fade line is flatter than Venus Tech's, and Venus Tech has been growing their assets more intensely in recent years. This is because Checkpoint is in the mature phase of the corporate life cycle, so it has a much larger market cap and cannot grow as quickly as smaller companies in the growth phase, like Venus Tech. Next, we are going to examine the two company scorecard percentiles, which compares their attractiveness relative to peers based on operational quality, momentum, and valuation. At first glance, it might seem like Venus Tech is the better investment because the overall score of 72 is higher than Checkpoint's. However, it is important to consider the individual scores of each component. Checkpoint's momentum score of 5 is contributing to its overall lower score. Momentum reflects market sentiment, so the score of 5 is suitable since Checkpoint is a mature company and there's not much activity going on. Venus Tech has a very high operational quality score of 94, which means that they are creating value and have high growth potential. Checkpoint has a higher valuation score because its warranted price is higher than its actual price, whereas Venus Tech is the opposite and is thus overvalued. To conclude, Checkpoint is a good investment for those who are risk-averse, since the company has already established itself in the market. Venus Tech, on the other hand, is better for those who are risk-driven, since it is more volatile but has more potential to grow.